Hey everybody, Josh Bennett here. Inflation is hitting the highest it's been in decades at 6.2%. So this is much higher than we've seen over the past couple months, which were still in the fives, which was still high percentage for inflation. But 6.2% is getting pretty ridiculous. This is something that we've been talking about for a while, and is something I've been definitely very concerned about and what the long-term implications could be of this. Basically, the Fed printed a bunch of money, and now we're paying the price for that from all the money printing that happened during COVID. Well, how can you protect yourself in this scenario? Well, in this video, we're going to go over 5 different inflation hedges that you can invest in to protect yourself against, well, inflation. So the first inflation hedge is this has been sort of the inflation hedge for centuries and even millennia, and that is gold. So gold is always been an inflation hedge. It doesn't necessarily always 100% correlate with inflation and immediately go up. Especially over the past 50, 100 years, we've seen sort of a tapering off from the true inflation hedge that gold once was. But that being said, there's a lot of speculation and belief that gold will continue to be an inflation hedge into the future. The reason it's been an inflation hedge is just the pure economics of it. On the world, there is a limited, finite amount of gold, and the amount that that's in the environment, and the amount that we're able to mine is a very small amount. You're only able to basically pull more gold out of the earth at about 1% to 2% per year. So that is kind of a natural inflation rate that's not going to skyrocket at any point. So it's a very stable store of value, and it's been used as a store of value for 5,000 years. We've had a sort of a gold standard, monetary system since the 1600s even. So, going even back 500 years, gold's been a real staple of value economically, but we only had a true gold standard for about 50 years. But long term throughout history, gold in its pure form has been used as a stable currency. And actually, what we've seen is throughout history when different nations tried to dilute the gold, like so, for example, this happened in ancient Rome where they had gold coins, and then they tried to dilute down those gold coins to sort of artificially create inflation, just to pay back debts and things like that. Well, when they did that, the currency collapsed. So, and then there's been about 5,000 different fiat currencies, aka currencies not based on a gold system, that have collapsed over time and reverted back to some sort of gold standard. So all that to say, gold has always been kind of the backstop throughout history as a way to maintain the money supply in a very secure way. So when inflation jumps off, the idea is that many investors will flock to gold as a protection from that, aka boosting the value of gold and doing well as an inflation hedge. So that's one. Next is kind of the new version of gold, which is Bitcoin. So Bitcoin is definitely seen as a potential inflation hedge. It is sort of yet to be proven, but the economics of Bitcoin are very similar to gold. Just based on how Bitcoin is mined is mathematically very similar to how gold is mined, at least the rates and how hard it gets. Just as an example, when you first started mining true gold, well, you could go to a river and you could pick up a block of gold in a lot of places. That's kind of what caused the gold rush, was just people started finding little bricks of gold in California, and fled to try and get the easy stuff. And then from there, it resulted in them people having to essentially dig mines into mountains and power wash essentially with giant fire hoses, and basically literally melt down mountains with water to be able to get gold at a very small rate. So that sort of same thing happens mathematically with Bitcoin, where over time the problems in the cryptography that allows you to mine Bitcoin gets harder and harder and harder, and so aka you have less yield in terms of the amount of Bitcoins that are coming into the market. Very similar to gold. There's also a finite amount of Bitcoins that are ever able to be mined, just like there's a finite amount of gold that could ever be mined on the earth. So the economics are very similar between gold and Bitcoin. Again, Bitcoin's not proven yet, but the belief is that it will be an inflation hedge. And as the inflation numbers came out, Bitcoin hit all-time highs as a result. And so that's, I think, sort of a real-life test that is what people believe is as that the drum of inflation beats, people are jumping to Bitcoin as an inflation hedge. So I think Bitcoin could, again, not be that's proven yet, but it could be a really good long-term inflation hedge. Third is real estate. So real estate is, just in the nature of itself, especially when I'm talking about real estate, I'm not necessarily talking about your home real estate, but rental properties as well as commercial real estate, those sorts of things. Because ultimately your tenants are paying rent at those properties. And since they're paying rent, as the cost of things go up and the cost of life goes up, well, they're going to be paying more for that rent, aka the cash flow that's coming to you is over time going to go up and up and up. So it's going to keep pace with inflation, at least somewhat keep pace with inflation. So you're not going to just lose your value as the dollar deteriorates. So real estate can be another really powerful inflation hedge. But again, not necessarily talking about real estate as in assets themselves. You can get some inflation protection from that just because as the price of things go up, the price of cost of living goes up. Well, people, the dollars of houses values go up too, historically. That being said, there's much more speculation when it comes to the asset values themselves, but cash flow, especially within rental properties, can be a really powerful inflation hedge. The fourth one is something that I'm personally very passionate about, especially right now with everything going on, and that's farmland. So one, farmland is a great investment just because, one, you're growing food, which is a commodity, which we're going to talk about next. Commodities increase in value with the price of things as they increase in costs. So aka the crops that are grown on farmland keeps up with inflation, but also land is a scarce asset. So similar to the economics of gold and Bitcoin, it's a scarce asset. So as there's more demand, there's only a limited number of supply. So the value naturally increases. So there's a lot of things that really, help when it comes to farmland. So taking a look here too, farmland actually over time has done about just as good as many other investments out there. So even outpacing the S&P 500, so outpacing stocks. So farmland is a pretty solid investment, but it also does really well with inflation, which is another, fun aspect of it. But again, farmland here is a really good return on investment long term. Does really well with inflation because of the economics that we were just mentioning. So I think farmland is a really good inflation hedge to consider. Last one, along the lines of farmland, commodities. So commodities are things like wheat, dairy, pork, all the things that are, like the name suggests, commodities. So things that, basically build the things that inflation tracks or the CPI tracks. So CPI is a measure of inflation. So these are different things that, again, go into the things. So as the things go up in price, the commodities are going up in price. So if you're investing in, the production of those commodities, well, your assets are going to keep pace with inflation. So it's makes pretty common sense. So just to kind of show, this is basically a commodity index compared to an inflation-adjusted commodity index, so adjusting for the actual cost of things. So you can see the two things track pretty closely together. So just, obviously keeping pretty close pace with inflation. So these are 5 different asset classes that I think are really good inflation hedges. And if you're curious about how you can start investing in these things like gold, commodities, real estate, those can all be done fairly easy through ETFs or exchange traded funds. There's a bunch of different funds like GLD, for example, tracks the spot price of gold. Real estate, there's a lot of REITs out there. So REITs stands for Real Estate Investment Trust. Those are different types of funds that you can buy that may invest in things like commercial real estate, rental properties, apartments, etc. Downside of those is real estate. One of the benefits, typically, if you own private real estate directly, you don't see necessarily the huge fluctuations in value that you may see with a publicly traded real estate, like real estate or REIT, real estate investment trust. So if you have the means or capacity, investing in rental properties and things like that directly could be a really good inflation hedge. The also nice thing about that is if you have debt, aka a mortgage, well, if the prices of things and the value of the dollar is decreasing and the price of things are going up, well, as the value of the dollar decreases, you're paying back that debt with cheaper and cheaper dollars, which means you're actually getting ahead in two ways because your asset, the property, is running up in value, plus you're paying back the debt with cheaper dollars. So it's kind of a win-win for you. So private real estate is going to be the best. There are options out there such as fundrise.com, different things like that allow you to invest in commercial real estate as private placements in smaller chunks than if you're actually going out and buying real estate yourself. So if you can't necessarily buy a real estate property yourself, then you may want to consider like different syndicates such as Fundrise or real estate investment trusts. So again, gold, REITs, and real estate, commodities, those can all be done through different ETFs. Commodities especially I recommend doing through ETFs just because no one wants to go out and buy 100 barrels of oil. It's just not practical. So you have different commodity indexes out there that track the actual price of things. For Bitcoin, there's a lot of different options out there, especially now. You have Coinbase, which is an easy way to buy Bitcoin, but you also have companies like, one of my favorite is Swan Bitcoin. So Swan Bitcoin allows you to purchase in small quantities. So right now the price of Bitcoin is about $65,000, which is probably too much for most people to buy outright. So, and also there's a lot of volatility in Bitcoin still these days. So what can be really valuable is buying just little chunks at a time over time. So for example, Swan Bitcoin allows you to do something like buy $50 of Bitcoin a day, or $10 of Bitcoin a day, whatever you can afford. It allows you to buy little chunks of that, and then once a week or so, it then buys. Say you've saved up $200 of Bitcoin, it'll buy, fractional shares of Bitcoin at $200. So it's a really cool tool. So like as Bitcoin goes up, you're buying a little bit more expensive. As it goes down in price, you're also buying when it's lower as well. So you sort of average out at a better price. So Swan Bitcoin is definitely something we're checking out. I'll link all of these in the below. But also for Farmland, what I was showing you is a site called Acre Trader. So Acre Trader is, I think, a really great resource for buying farmland. It allows you to buy fractional shares with management in a farmland. So that way you're not actually having to do any of the stuff yourself, because going to buy a farm yourself could be quite challenging. Whereas buying a share and having a manager and stuff manage it, going to be much easier. Buying farmland directly is not necessarily the cheapest route in the world, but if you have the means to do that, going through Acre Trader is going to be a really good tool. But hope you found this valuable. Again, these are 5 hedges for the massive inflation that we're seeing right now. And if you have the means or capacity, definitely start looking into this. Otherwise, make sure you're talking to your financial advisor, or potentially getting a financial advisor to see how you can protect your money with all the craziness that's going on in the world. But hope you found this valuable. Make sure you like and subscribe. Cheers until next time.